Well, good morning to everybody. My name is Alejandro Ramos. I'm the Executive Director of the U.S.-Mexico Chamber of Commerce Northeast Chapter. And on behalf of the Northeast Chapter and the California Chapter, we would like to welcome you all to a conversation this morning with Javier Guzman, Vice Governor of the Central Bank of Mexico, as part of our mission to communicate and inform our membership and the business and financial community about what is happening in Mexico. We are honored to have Javier this morning with us, sharing the views of his views and those of the Central Bank of Mexico regarding the economy and also the monetary policy that the bank has been following. I would like to take this opportunity to express our appreciation to BNY Mellon for sponsoring this event. Thank you very much for your support. Just a couple of administrative announcements. One is that, we will have a presentation by Javier, and following that, we will have some time for questions that our audience may have. We would like to ask you to post your questions in the chat that is provided in this platform and direct them to the presenter and the host. And at the end of Javier's presentation, we will compile the questions and present them to Javier. I would like to ask Marlene Marroquin, the director of the California chapter, to please introduce Vice Governor of the Central Bank of Mexico, Javier Guzman. Marlene.
Thank you all very much. It's a pleasure to be here with all of you this morning, and we thank you very much for those early birds that joined us at 8 a.m. California time. So that's we're very proud of you, especially on a Friday morning. And I just want to say very quickly that we are so grateful with Mr. Javier Guzman. He's a great friend of the chamber. He's been in California twice, in New York, I believe also twice. And he's a very, very good friend of ours, and we sincerely appreciate that. You read his bio. I just wanted to say that he holds an BA in economics from the UNAM, Universidad Nacional Autónoma de Mexico, and studies in economics from University of Louvain, and from Yale University. He serves as a deputy director of the Banco de Mexico since 2013 until this year. So without further ado, and we have so much information that we look forward to hearing, we welcome you, Javier, and thank you very much for being here.
Well, thank you very much, Marlene, and thanks very much to you and to Alejandro for the kind invitation to join you again. Let me tell you that I have always found these meetings with you, organized by you, very productive. So I am very glad to be here with you. I also wish to thank all the participants. And these are interesting times. This is a good time to have an exchange of views. So thanks to everybody. What I will be doing is I will obviously concentrate my remarks on monetary policy, but I will be speaking in general about the effects of the pandemic on the Mexican economy, the implications for monetary policy, and I will also refer to other policies that have been implemented or that need to be implemented as a response to the pandemic. What I will do is I have a PowerPoint presentation, so I will go over the slides, and then I will allow time for questions and at the end for discussion, of course. If you give us the control, Alejandro, to be able to present, to include the PowerPoint presentation.
It's activated. You should be able to start sharing your presentation.
Okay, there it is. Okay, so let me start with the external environment that the Mexican economy is facing. I will be very brief here. I will only point to the most important elements of the world economic situation that are of relevance for the Mexican economy. You know that we are going through a very difficult period. This basically by the effects of the pandemic and the policies that have been implemented to respond to it. We have seen a very weak economic activity at the beginning of the year, and it is anticipated that during the second quarter of the year, the situation is going to be even weaker than that. According to the latest estimates by the IMF, world economic activity will contract by around 3% this year, and then we are likely to see, or we are expecting to see, a modest recovery in 2021. But let me tell you that already we have received signals from the managing director of the fund that these projections that are from April are going to be adjusted down. We continue to see a different situation, and we continue to see projections adjusted to the downside. The U.S. economy, the performance is very important for the world economy in general, of course, and particularly relevant for Mexico. What we have seen in the U.S. is a contraction of GDP, and very important for Mexico, a sharp contraction also of industrial output. The expectations at this stage are for a relatively quick recovery, as you see in this chart, both for GDP and for industrial output. We had this morning relatively good figures about unemployment in the United States. And if this scenario materializes, of course, it is going to be very positive for the Mexican economy. The thing is that this scenario is surrounded by a lot of uncertainty and with a balance of risks.
Sorry, Javier, sorry to interrupt, but we are not being able to see your presentation. I think that you are sharing not the screen with your presentation, but other screen.
Okay, let me check it.
And also there is a lot of background noise. Can we ask everyone to please mute your microphones because we cannot hear. Thank you very much. We appreciate that.
Do you see it now, Alejandro?
Not yet.
Hold it a second, please.
Come.
Is it okay now?
No, not yet. What I can do, let me see. I will share. It seems that it's working now.
Okay. Is it there now? Okay. So I was referring to this chart and the situation in the U.S. economy, basically the evolution of GDP, industrial output, and the expectations, the latest projections by blue chip economic indicators. And as I was saying, what you can see is that the expectation continues to be a relatively rapid recovery of the U.S. economy. But as I said before, the problem is that this is still subject to a lot of uncertainty and with risks that are clearly to the downside. Now, obviously, with that contraction of economic activity that we are seeing worldwide, that has had an important impact on world trade. This is also very relevant for Mexico's economy, given the degree of openness to trade of the economy. At the same time, we have seen an effect on commodity prices. In this case, the most relevant price for Mexico is that related to crude oil. Oil is not important as a share of GDP in Mexico. It is not very relevant as a share of exports, but it is very important as a share for public finances. So this is another important development that is affecting the Mexican economy. In addition to that, we have seen an increase in risk aversion applied to quality. And of course, that has affected emerging markets in general. When you take a look at capital flows to emerging market economies, you will see substantial outflows over the course of this year. And in fact, if you compare the outlooks that you have seen this year with other recent episodes of uncertainty, you will see that at least in absolute terms, the outlooks on this occasion have been stronger. And then what has been the response overall to this situation? Well, in addition to actions to contain the public health problem, we have seen an aggressive implementation of fiscal and monetary policies in many countries. As a result of these policies, what we see is an improving sentiment and the gradual restart of economic activities in many countries. And in turn, this restart of economic activity is reinforcing the improvement in sentiment. However, the situation continues to be very complicated. We see a number of risks, the perception of uncertainty among firms and individuals. We have the possibility of new episodes of contagion. I think this is a scenario that has a high probability to materialize. We see continuous tensions between the USA and China that are not helping this situation of uncertainty that we are facing. Later in the year, we are going to have a presidential election in the United States, and that may give rise to additional episodes of uncertainty. We have seen for many years political and geopolitical conflicts, and under current circumstances, of course, that sort of situation can contribute to an additional increase in anxiety. And then as a result of the actions of the policies that have been implemented, we can see either the emergence or the increase of financial vulnerabilities in some countries. So the situation overall continues to be very difficult. What has happened in the case of Mexico? Well, as in other countries, Mexico's economy has been hit through several channels. We have seen a combination of shocks. A demand shock. The demand shock results, on the one hand, from the fact that external demand has declined significantly as a result of the crisis. But we also see a problem with internal demand that is resulting from a combination of uncertainty and the measures that have been implemented to try to contain the crisis and the impact of income of consumers and firms and so on. At the same time, we are seeing a supply shock. Well, we see that many businesses that have closed as a result of the policies that have been implemented. And this has had an effect on supply chains. You know that supply chains are also very important for Mexico. And in addition to that, to the supply of goods to the economy in general, and that has a number of adverse effects. And then in the third place, we see a shock of a financial nature. What we have seen, I was saying before, an increase in risk aversion, and that has complicated, of course, access to external financing. It has resulted in capital outflows, pressures on domestic financial markets, and so on. In the case of Mexico, we have a couple of additional elements that give rise to challenges for the Mexican economy. One is the degree of openness of the economy to both trade and capital flows. You know that the Mexican economy is one of the most open among emerging market economies. And then the other issue that is important is the fact that both remittances and tourism, which are going to be significantly affected by the crisis, are very important in the case of Mexico. What do we see in recent indicators? Let me start with economic activity. When you take a look at the evolution of economic activity in Mexico, you already see a significant impact. We saw an important decline in GDP in the first quarter of the year. And the problem is that given the timing of the pandemic in the case of Mexico, well, the impact is going to be for sure larger in the second quarter. And in fact, if you take a look at the most timely indicators, for instance, the PMIs, what you see is clearly that the decline of economic activity has accentuated in April and in May. Of course, as a result of this, we have seen an important effect on employment. I have three indicators here to give you an idea of how important this has been. The first one is the labor participation rate that has declined very severely. And as a result of that, what you are seeing is a contraction of employment, both in the formal and in the informal sector. Simultaneously, we see a sharp jump in the underemployment rate. And then when you take a look at the workers that have been most affected in the formal sector by this weakening of economic activity, you see that that is mainly concentrated on those workers with the lower salaries. That is to say, the crisis is having a significant social cost in addition to the economic cost. Now, we have already begun with a gradual reopening of activities, and this is expected to continue in coming weeks. This should, of course, have an impact on economic activity. However, there is a lot of uncertainty of the strength and the durability of this upturn. And why is that? Well, we have a combination of elements. The first one is that obviously the opening of sectors is going to be gradual. Secondly, we cannot discard the possibility of new episodes of contagion. In fact, the pandemic is hitting Mexico very hard at this stage. Third, we should expect a cautious attitude by both consumers and investors, given the nature of the shock that we are facing. Another important element is that the policy response to the crisis has been unbalanced. And I would say that in particular, the fiscal effort that has been set in motion to tackle the problems resulting from the pandemic have been relatively modest so far. And then, in addition to that, the situation is complicated by the fact that as a result of some policies that have been implemented recently, the climate for private investment in Mexico has deteriorated. So as you can see, the situation is very uncertain. And this, of course, gives rise to a lot of uncertainty as to what the behavior of GDP is going to be this year and the next. Normally, when we publish our quarterly report, we present a baseline scenario for the evolution of the main macroeconomic aggregates. In this case, as has been done in other central banks, we have changed the presentation. And now what we have presented is three alternative scenarios. And this is basically as a result of this degree of uncertainty that we are facing. One of the scenarios assumes a V-shaped recovery, a rapid recovery. The second one is also V-shaped, but the difference is that the contraction in economic activity is deeper in 2020. And the third scenario is a U-shaped recovery. So as you can see in the table that is included in this chart, well, the implications for the evolution of economic activity this year and the next can vary significantly. From a contraction of economic activity in 2020 of minus 4.6% to one in which the contraction can go as deep as 8.8%, almost 9%. And also, of course, the recovery for next year varies from one scenario to the other. And in one of them, the U-shape, what you see is that the assumption is that in fact, economic activity contracts again in 2021. I present in this chart to be able to provide you with a comparison with what analysts from the private sector are anticipating. Well, the expectations about economic growth in 2020 and 2021 that result from the surveys that are conducted by the central bank. And as you can see, the median of analysts' expectations for 2020 is for a contraction of 8%, and they are anticipating for 2021 a median upturn of 2.2%. But if you take a look at the shaded areas, that is the range of projections by the different analysts, what you see is a significant widening. And that is, of course, the result of precisely the uncertainty that we are facing to make projections for what the evolution of economic activity is going to be. Let me turn now to the situation of inflation. In this case, what we see is a mixed picture. Headline inflation is at a relatively low level. The latest figure that we have available is for the first half of May. And what we see there is headline inflation at 2.8%, that is to say below the 3% target. But take a look at the evolution of core inflation. Core inflation has been stuck at levels above the target already for a significant period. And this has been the result of a combination of factors that in fact have been changing over time. So obviously the decline that we have seen in headline inflation is the result of the reduction of non-core inflation, the stream right in this chart. And that in turn, recently, has been the result fundamentally of the evolution of gasoline prices. As you can see in the table, gasoline prices have been falling at annual rate of 20% or even more than that. Now, what can we expect about the evolution of inflation in coming months? Well, naturally, it is difficult to expect that energy prices are going to continue to show the sort of annual rates that we have seen. In fact, we have seen recently a recovery in energy prices that is going to have an impact on inflation. Secondly, we are going to have arithmetic effects, and this is going to take place particularly in the second quarter of next year. That is going because of base effects, simply a statistical effect. We are going to see a jump in inflation in the second quarter of next year. In addition to that, we have seen a significant depreciation of the peso, and that has an impact on inflation. The pass-through in the case of Mexico is low, but even with that low pass-through, given the magnitude of the depreciation, that should have an impact on prices. And then I was also referring before to the supply shocks on the economy, and that, of course, also results in pressures on inflation to the upside. So the result of all of this is that it is probable that we will see during the rest of this year and in the first half of 2021, figures for headline inflation above the 3% target. However, it is important to take into consideration that in implementing monetary policy, you must focus on the behavior of inflation during the period during which monetary policy has an influence. And that is a period of 1 year to 1 year and a half to 2 years. Now, I said the picture I was presenting before is we're anticipating a contraction of economic activity, a significant contraction of economic activity in 2020, perhaps some recovery in 2021, but that is going to be modest. The implication of that is that the output gap is going to be negative and it's going to widen during the course of this year and the next. And therefore, my point of view is that at the end, the demand effect on prices is going to offset or to more than offset the pressures on inflation to the upside. And therefore, I think it is reasonable to anticipate that inflation, headline inflation, should converge to the target in the second half of next year. Now, it is also true that this is going to take place in a context in which you are going to see pressures on prices to the upside, basically because of the depreciation of the peso and the shocks and the supply shocks, and to the downside, mainly because of the contraction of domestic demand. So we are going, I think, to converge to the target, but it is also true that we are facing a situation of significant uncertainty regarding the future evolution of inflation. Now, in the latest quarterly report of the central bank, we include the scenarios, the possible scenarios for the evolution of headline and core inflation. Let me clarify that these scenarios are built on the basis of the inflationary implications of the different trajectories for GDP that I described before. And what I am showing here, and what it is shown in the inflation report of the central bank, is the midpoint of those three scenarios. That's what you see here. And then basically the evolution of inflation, the red lines that we are anticipating nowadays, is consistent with the description I mentioned before, an increase in headline inflation, a sharp increase in the second quarter of next year, and then a decline to the 3% figure. In the case of core inflation is expected to remain relatively high this year and then decline. And if you see the second half of next year, you will see that core inflation is even below the 3% target. So that is, I think this is the most likely scenario that will determine the evolution of prices for the rest of this year and for the next. Now, what has been the monetary policy response to the crisis and to this evolution of inflation? Well, we have relaxed monetary policy significantly. In fact, the relaxation of monetary policy began in August last year, as you can see in this chart, but it accelerated after we were hit by the pandemic. So a significant relaxation of monetary policy. But that is not the only action that has been implemented by the central bank. At the same time, we have taken a number of additional measures. And the general objective of these measures has been, in the first place, to ensure that the financial system has adequate levels of liquidity. Secondly, we have seen disorderly conditions in domestic financial markets, and some of the measures that have been implemented have been aimed precisely at trying to restore orderly conditions in this market. In the third place, we are trying to ensure that domestic credit does not contract, that we have an expansion of domestic credit in the economy, so that we do not have an additional adverse effect from this source. And then, in addition to that, together with the Ministry of Finance in the context of the Foreign Exchange Commission, we have taken several measures to strengthen the capacity of the foreign exchange system to respond to periods of excessive volatility in the exchange rate. And in this regard, the most important measures that we have taken are adjustments to the hedging program that we have in place for the coverage of foreign exchange risks. We increased the program from $20 to $30 billion. And at the same time, we introduced other adjustments to allow us to intervene in the foreign exchange market with this program when domestic markets are closed. At the same time, we have negotiated a swap line with the US Federal Reserve for $60 billion. And this is, of course, additional to the flexible credit line that we have negotiated with the IMF for an amount of $61 billion. What has been the result of these measures? Well, they have combined with an improvement in global sentiment, and the result has been an improvement in conditions in domestic financial markets. I simply show here two illustrations of this. Take a look at the exchange rate. We saw a very large depreciation of the peso at the beginning of the pandemic, then a period of a lot of volatility, and more recently, we are seeing an appreciation of the peso. Still, the peso has depreciated significantly. In the case of the domestic fixed income markets, what we have seen is, as you can see in the right-hand side, initially we saw a jump in long-term interest rates. And then the combination of factors I just mentioned has allowed interest rates to decline, in some cases to levels similar to the ones that we were seeing before the pandemic hit us. And in other cases, in the case of 10-year bonds, you see that the level of interest rates is even lower than before the pandemic. I need to make a clarification here, and it applies to both markets, that is to say to the fixed income market and to the foreign exchange market. In general, the conditions in these markets have not returned to what we could say are normal levels. They continue to see a deterioration, although in recent weeks, what we have seen is a continuous improvement. Then another result from this combination of a better external situation and the actions that have been taken is to contain capital outflows. Initially, we saw a large capital outflows from Mexico, as you see in this chart. And then more recently, the situation is more stable. And when you take a look at capital outflows from Mexico and other emerging market economies, you see that the situation in Mexico is not an outlier. It's basically in the mid-range of the outflows that you have seen in the most important emerging market economies. Now, Having said this, it is also important to underline that the situation continues to be very uncertain and that the risks are very high. And in fact, this has been reflected, I would say, in two elements. First, credit rating agencies have downgraded the sovereign debt, Mexico's sovereign debt. And in addition to that, we have also seen downgrades for Pemex debt, as you probably know. When you take a look at market indicators like credit default swaps, for instance, you have seen a jump, and we are not still back to the levels that we saw before the beginning of the pandemic. Now, the jump has been generalized also among emerging market economies, and as you can see in the chart or in the graph on the right-hand side, well, the evolution of credit default swaps for Mexico has been more or less consistent with that observed in other emerging market economies. Now, looking forward, what can we say about the implementation of monetary policy? My personal point of view is that given the evolution of inflation determinants I described before, it is probable, it is reasonable to think that we have room for a further relaxation of monetary policy. However, my impression is that it would be both imprudent and I think it would be misleading to provide forward guidance beyond this. And why is this the case? Well, first of all, I already said we are facing a situation of extremely high uncertainty regarding what the future of the main macroeconomic aggregates is going to be. And this also applies, of course, to what the behavior of financial markets is going to be and what the external environment is going to look like in coming months. But this is not the only factor that is a constraint to give a more precise guidance on where monetary policy is heading. There is an additional element. What we are facing now is a shock of a global nature, a substantial increase in risk aversion worldwide. And under these circumstances, the usefulness of a number of tools that we have available as point of reference for the implementation of monetary policy, the usefulness is not that clear. The signals are blurred. And what do I refer specifically to? Well, the first one is the role of interest rate differentials. It is generally believed that with the shocks that we are facing, the role of interest rate differentials is less important now. That is true. But the thing is that interest rate differentials still have a role to play. The thing is that we do not know to what extent that is playing a role. And the other element we do not know is when the situation is going to normalize and when, therefore, interest rate differentials are going to play the role they were playing before. And then another important factor for the implementation of monetary policy is where the neutral rate is. Determining the neutral rate is very difficult. This is a variable which is not non-observable. This is difficult under normal circumstances, but it is even more complicated now given the shocks that we are facing. And what are these shocks? High uncertainty, a tightening of global financial conditions, and then another element which is important to underline is that it is possible that we are seeing also a decline in potential growth in Mexico. And of course, these shocks have effects in opposite directions on the neutral rate. So it is very difficult at this stage to try to determine exactly where the neutral rate is. So what is the implication of all of this? The implication from my point of view is that monetary policy has to be implemented with a lot of caution. For instance, let me tell you, we could think about a more aggressive monetary policy response to the current situation to try to stimulate economic activity. What would be the counterpart of this? High risks, given the context that we are facing. For instance, given a lot of uncertainty about how financial markets are going to respond and so on, and given the difficult information that we have from a number of indicators that guide the implementation of monetary policy. And what would be the benefit of this aggressive monetary policy response? Well, at best, a modest impact on growth. And why is that? Why is that the case? Well, you know that in the case of Mexico, credit as a share of GDP is relatively low. In addition to that, financial inclusion is low, and therefore the impact of interest rate movements on economic activity under normal circumstances is low. But we have an additional element in this case, and the thing is that there is a widespread perception that when you face a shock like the one we are facing today, the role of the impact of monetary policy, the effectiveness of monetary policy is contained. Why? Because interest rate movements do not necessarily reflect in a significant stimulus of economic activity when you are facing a lot of uncertainty among consumers and investors because of a shock like this one determined by a pandemic. So I insist, I think there is room for a relaxation of monetary policy, but we have to proceed with a lot of caution, because otherwise the effect can be counterproductive. The final comment I would make, and this is related to the overall concept of economic policy in Mexico. We are facing, of course, a very serious challenge in Mexico from the pandemic, as I just described. But at the same time, we are facing a situation in which the potential rate of growth is low. We need to increase that. And what do we need to do to face this combination of challenges? Well, naturally, I think it is evident that we need efforts with several policy instruments. We need a balanced policy approach. To start with, we have to be ready to take any actions that are needed on the monetary policy front, and also in the financial area. Financial stability has to be preserved. We have been, in close contact with the Ministry of Finance, with other financial authorities, to assess the evolution of financial stability. In fact, next week you will have available the financial stability report that the central bank publishes. You will get a better idea there of what the areas of concern are and what the situation is. We are monitoring the situation very carefully, and we have to be ready to take in these two areas, monetary and financial, any additional actions that are needed. But I think we need further efforts on a number of fronts. The first one, I already mentioned it, is fiscal policy. I think we need additional fiscal support in response to the crisis. It is true that the fiscal space in Mexico is not very wide. I think the fiscal space is narrow, but there is, I think, room for action even within that context. One possibility, of course, is a major reorientation of public spending towards public health and towards the sectors that have been most affected by the crisis. And in any case, if a more ambitious effort were to be implemented, this should be accompanied by the actions that would be taken afterwards to make sure that this effort is sustainable. That is to say, that we will not have a serious concern about the situation of public finances down the road, because obviously that would be counterproductive. Secondly, we need stronger bonds with the private sector. We need to foster a more friendly environment for investment. I think the environment for private investment in Mexico has deteriorated in recent months. In addition to that, we need adequate responses to a number of institutional and public policy issues that have been mentioned repeatedly, both by businessmen and private sector analysts, as major obstacles for economic growth. And what do I mean here? I point three elements that are consistently noted in this regard, and they refer to the rule of law, to the situation of insecurity, and to the situation of corruption. And then an additional element that is key, a very difficult area, is additional efforts to increase total factor productivity of the economy. In the absence of efforts in all these directions, I think the risk is that we may see a more severe deterioration of economic activities, and we may see an even larger decline of the potential rate of growth, which, as I mentioned before, is already at low levels. So with this, I close, and I will be glad to take any questions that you may have.
Well, now we open this platform for any questions that you may have. If you can please post your questions in the chat, I think that that's going to be the easiest way to do it. Right now, we receive one initial question. The question is if you can elaborate a little bit more on the measures that the government can implement in order to improve the investment climate.
Yes, of course. Well, we have seen over the course of the last months some differences of opinion between the private sector and the government regarding the policies that have been implemented in some sectors. Initially, it was announced that there was going to be a major joint effort by the government and the private sector on investment in the energy sector. And then the announcement has been postponed, and the private sector has been complaining that they are receiving mixed signals regarding specifically what the private sector participation in the energy sector is going to be. In addition to that, we have had some last minute reconsiderations of the government regarding some investments by foreign investors in some sectors of the economy. And that has also given rise to complaints by the private sector and to, many of them stressing the need for a clearer position, clearer signals on the part of the government what the rules of the game are for the participation of the private sector. Very recently also, we had a number of announcements by the government regarding the participation of the private sector in electricity, in the generation of electricity. And again, the complaint was that the rules of the game were changed, that they need more certainty, that it is very important to have, to have an environment in which the signals for the participation of the private sector in the economy are clearer. So that has been the kind of complaints that we have heard from the private sector. And I think it is very important for the government to get close to them, to have a closer dialogue, and to set, very clear rules of the game for the involvement of the private sector in a number of activities in the economy. That is the sort of considerations that have been on the table, and the private sector has been insisting a lot on.
Thank you. Just a small commercial. Well, you mentioned the electricity sector, and we at the Chamber, we're going to have one roundtable next week precisely to analyze the effects of the recent policies announced by the government and the effects on the renewable energy sector. We will send all of you the information about this event that we're going to have next week. Another question that we have is how much of the economic contraction is explained by the coronavirus situation vis-a-vis the structural and other underlying challenges?
Yeah, well, I think it is a fair question. First of all, I would say economic activity was already weakening significantly before the pandemic hit the economy. If you take a look at the graph I presented regarding the behavior of GDP in the last years, you will see that in fact, economic activity was very weak. In 2019, we saw a slight contraction of economic activity. And if you see the last 4 quarters, in fact, before the pandemic began to affect Mexico, we were already seeing a contraction of economic activity. If you ask me what is the most worrisome element of that evolution of economic activity, I would definitely say it is the behavior of investment. Investment was stuck for a significant period of time. In fact, it began to stagnate in 2015. And then the explanation has been changing over time. But then in more recent months, what we have seen is a decline in investment. And of course, when you see a decline in investment, what you are doing is you are putting in danger the potential for economic growth. So that is a source of a lot of concern. Now, having said that, and having underlined that the economy was weak before the pandemic, of course, when you take a look at the effect at the margin, at the contraction of economic activity that we are seeing now, well, the main explanatory factor is the pandemic. I mean, in the absence of the pandemic, you will not be seeing the sort of projections for the evolution of GDP that we are seeing nowadays. Perhaps you would continue to see a weak economy, but not to that extent. So at the margin, the main explanatory factor is the pandemic. But of course, this is hitting an economy that was already weak and in which investment was behaving in a very worrisome way.
Thank you. Another question that we received, actually, there are a couple of similar questions, are related to the USMCA. If you have any comments about the fact that on July 1st, the USMCA is coming into effect, how that, what are the implications for the economic implications of the entrance of the agreement?
That's clearly a positive for the Mexican economy. That should contribute. I mean, there are some elements that should contribute to, to stimulate the economic recovery in Mexico. One of them is clearly the USMCA. It is an agreement, that I was mentioning before that the factors that have an adverse impact on investment have changed over time. And I was saying that investment has been stagnant since 2015, since mid-2015, more or less. Well, one of the factors that affected investment very severely in Mexico was precisely uncertainty as to what was going to happen with the USMCA. And it affected not only investment, it also had an impact on domestic financial markets. Once that cloud is dissipated, well, the USMCA is clearly a positive element. It should be a positive factor for investment. It should be a positive factor for the evolution of exports. It provides an element of certainty in Mexico that is very important in the present circumstances and so on. Now, is that going to be sufficient to offset the effects of the pandemic? Well, no, as I said before. Given the magnitude of the shock that we are facing and the requirements of the Mexican economy, we need efforts on many fronts. But clearly, the USMCA is a positive element.
Thank you. Another question that we have is, it starts with a comment saying that global liquidity is helping to improve the current financial conditions. And well, if you have any comments regarding whether this further improvement, what's going to be the effect on the terminal rate for this year? If you see the same terminal rate, or if the financial conditions improve, you see a different rate at the end of the year.
Well, first of all, let me tell you that we will not make projections about the terminal rate. As well, I was insisting before that it is very clear that it's clear to me, at least, because I am not representing the board here. I'm speaking on a personal basis. But it is very clear to me that under present circumstances, it would be very difficult, and it would not be the wiser way to proceed to try to provide a very specific guidance about how interest rates are going to behave. So that's the first comment I would make. Now, the second comment I would make is, to the extent that global financial conditions improve, that of course allows domestic financial markets to behave more orderly, a more positive evolution of domestic financial markets. that is likely to have, a positive impact on the inflation rate. Now, if that materializes, well, that is a positive factor for inflation, and that should be a positive factor for the implementation of monetary policy. The thing is that inflation has many determinants, not only one. So whenever you think about where the evolution of inflation is going to be, you need to think, of course, about all the determinants. So if you tell me, would that be a positive element? Yeah, that would be a positive element. Would I be in a position to say that that changes the terminal rate? I would say, well, I would not be in a position to say that because I am not in a position to say what the terminal rate would be. But it would be a positive factor, of course. I hope that expectation materializes.
Thank you. Another question we have is, to what extent do you believe that potential further reduction on the credit rating for Pemex and subsequently for Mexico for the sovereign rating can be mitigated through economic policies and economic stimulus?
Well, economic policies, of course, are fundamental to avoid additional downgrades on both the sovereign rating and in the case of Pemex. Whether that materializes or not depends to a very significant extent, and I would say it is the most important element, on the policies that are implemented. So that is a crucial component. I was saying before that to tackle the problems that we are facing, we need a combination of actions in a number of fronts. We need to strengthen economic fundamentals in Mexico. We need to strengthen the potential for growth in the long term. To the extent the correct policies are implemented to tackle these problems, well, we can avoid any further downgrades. We can even think about upgrades. So economic policy and the policies that are implemented, to provide a long-term solution to the challenges that Pemex is facing are crucial, for the situation of the country and therefore for the evaluation that rating agencies can do about it. If you ask me, is it a fact? I know that there is a generalized expectation that, or let's say there are many analysts that are anticipating that the sovereign rating of Mexico is going to be downgraded again. Is that a fact? Of course not. It all depends on the economic policy response. So no, this is not a fact. If we take the correct actions, we can avoid that kind of results.
Thank you. What is your opinion on the implications that the decreasing growth will have over public spending, both as it applies for infrastructure projects and for government operational budgets?
Well, that is a question that is very difficult for me to answer because that depends on the policies those policies are decided by the Ministry of Finance, not by the central bank. So it would be very difficult for me to guess what the response of the Ministry of Finance is going to be to the current situation. Are they going to implement a more relaxed, going to provide more fiscal support or not under current circumstances? I really do not know. I know from the signals that they have been sending publicly, from the statements that they have been making, that they are very determined to be very prudent on the fiscal front, that they are very concerned about a situation in which public finances deteriorate significantly. Now, to what extent they will try to make that consistent with an additional effort to support employment, to support sectors that have been very severely affected by the crisis and so on, I do not know. I do not have the answer. That's an area in which the central bank does not have any influence at all.
Thank you. Another question is, well, the central bank has acted twice on scheduled meetings, signaling that the gravity of the situation and showing a proactiveness in the part of the central bank. With the Mexican peso well off the heights and markets in general more stable from the peak of the crisis, Would this mean that on scheduled meetings have a lower probability of happening, or this is now a tool that could be used more often?
Well, I would say to the extent that the situation improves and that we are more confident about the evolution of investment, the evolution of financial markets, evolution in general of inflation, I meant to say not investment, inflation, financial markets, about the evolution of the determinants of inflation in general, of course, the need to take urgent actions declines. Now, the thing is that going to happen? We do not know. We have seen an improvement in sentiment, a better behavior of markets in recent weeks. To the extent that continues, well, you know, the need for the need to act on a more frequent basis in the case of meetings that are unscheduled and so on declines. So basically, because the situation is improving, you need to make an assessment of to what extent that allows the convergence of inflation to the target within the period of influence of monetary policy. The main element there is that we do not know if that situation is going to continue or not. We do not know if we are going to have additional bouts of financial uncertainty. And the thing is, we have to be ready to act whenever this is needed. If the situation improves and, you know, sentiment is better and everything is more stable and so on, well, obviously the challenges for monetary policy and the urgency for monetary policy actions decline. But the problem is that in such a context of uncertainty as the one we are facing, we cannot discard the possibility of additional episodes of turbulence. And should they materialize, we will need to assess the situation, assess the implications for inflation, and then on that basis determine whether there is a need for, you know, additional actions or not.
Thank you. We're going to take one final question because we are reaching the end time of this webcast. So the question is, given the current conditions, do you see room for tax reform to incentivize the economy, or should we expect the stagnant policy which refrains from introducing tax reform in Mexico?
Well, I have the impression that given the challenges that public finances are facing, the consideration of tax reform should be there. In fact, the Ministry of Finance in previous weeks was speaking publicly about the possibility of introducing a tax reform sometime next year. I think this is very important. Public finance as well, public revenues in Mexico are very low. We have a number of challenges for public finances, the most important among them deriving from the situation in Pemex. They will probably need to find, you know, additional resources from somewhere. And well, one possibility, I assume there are several possibilities to do this, but one clear possibility, and that has been discussed, as I said before, publicly by the Ministry of Finance, is tax reform. Now, it is also true that tax reforms also face political complications. Next year is an electoral year, and I do not know how that interferes with the plans that you know, the Ministry of Finance has. I think it is an important issue. I think it should be evaluated. I think it should be considered, given the two elements I was mentioning before: low public revenues plus challenges deriving from a number of factors. The most important one of them, Pemex. But well, they have to consider the alternatives. It has to be on the table. And well, when this will be feasible, I do not know, but clearly it is a very important issue.
Thank you very much, Javier. And with that, we are going to conclude our webcast. We would like to again express our appreciation for participating. Thank you very much, Javier, for joining us. For those of you that are interested in getting a copy of the presentation, please just write an email to the account that from where you received the confirmation for this webcast. I would like to thank again the BNY Mellon for supporting this web. And again, thank you very much to everyone on behalf of the Northeast and the California chapter of the U.S.-Mexico Chamber of Commerce. Thank you very much.
Thank you very much, Alejandro. Thanks very much, Marlene, and thanks to all the participants. Thanks for your questions. Okay.
Thank you very much. Thank you very much to you all.
Thank you. Bye-bye.
Have a wonderful day. Thank you very much. Bye.